Hello friends, this is Raj Sastry from Raj Option Trading. Today is May 22nd, 2022. Hope you're all doing well. In today's segment, let's take a look at high and low volatility option trading strategies. Look, market is very volatile. We got to look at these option strategies and make some money from this volatile market. And we got a great stock here, AMD. I love this company. Stock has been coming down a lot, and company had a nice earning announcement, and companies firing in all cylinders. Let's look at stocks like AMD and see what stocks we can buy, and more importantly, what high and low volatility option strategies we can implement here. So with that, let's jump in and get started. Look, we'll start with a quick market update and look at TTM Squeeze Indicator by John Carter. Look at the stocks which are about to break out even on the higher side or lower side. And finally, let's implement some high and low volatility option trading strategies. So with that, let's jump in and get started. All right, so look, from a market perspective, we are not in a great shape. Tech stocks are have their longest weekly losing streak here, and semiconductor stocks like Applied Material, they're not doing great. There is supply chain issues. On the other hand, Palo Alto Networks went higher after the company gave higher guidance. And we got John Deere came down. It is at a 15-month low right now, and market is really whipsawing here. It doesn't know what to do. Just on Friday, look here, it went down and then went higher. It's indecisive. It does not know where to go. It's hostage to various macroeconomic factors like geopolitical tensions in Russia, Ukraine, and high inflation, supply chain costs, China lockdown, you name it. We got a lot of uncertainties right now. So with that, let's jump in and get started. All right, so we will take a look at stocks that have got TTM squeeze indication. So you might wonder, what is this TTM squeeze? TTM squeeze is an indicator developed by John Carter. What this does is, as you can see here, we'll go through it very slowly here. So look, it's got a lower chart in Thinkorswim platform, and you're looking for a red dot here. Look, there is a red dot here. And as the red dot is forming, then you got to be looking at long-term C wave. This is called long-term C wave here. And when the red dot is forming here, long-term C wave is above zero. So when the long-term C wave is above zero like this, John Carter says you can buy the stock, or you can buy call option. And look, we got red dots forming right here, bunch of red dot. A bunch of red dots will indicate there is a tight compression of volatility, and Bollinger Band is inside Kelton channel. That tells you volatility is compressed at this time. When that happens, if you see long-term C wave, if that's above zero, then you got to go long and go from there. Look, it's been firing here, all the red dots here. Long-term C wave is above zero, and this is a little bit dated chart here that tells you this CLF stock can go higher. And that's the thought process here. When you see a bunch of red dots here, that tells you there is a squeeze forming, and red dot indicates there is a tight compression of volatility, and Bollinger Band is within the Kelton channel, and stock has to go higher quickly. And the first green dot after a series of red dots indicate that energy is ready to be released. Look, we got first green dot here. When the first green dot is forming, the C wave is above zero. Look, it's a zero line right here. C wave is above zero. That tells you stock can go higher. And look, stock has gone higher. That's the thought process here. You got to be watching for the red dots here. And look at the first green dot that tells you energy is ready to be released. And to understand the direction, you got to be looking at the C wave. If C wave is above zero line here, look, this is zero line. C wave is above zero. That tells you stock may go higher. And best squeezes are the ones which fire off in the direction of C wave. So look, this one is the best squeeze here. You got C wave above zero. That tells you this squeeze can fire on the higher side. That's happening right here. And you got, if it is going to fire on the higher side, you can buy call option and make sure IV percentile is below 50. Normally I love to do this when IV percentile is low, if I want to buy call option, and RSI below 55. And pay attention to how the stock is responding in the prior scenarios. You don't want to buy call option on a stock that does not move much. So that's why I understand how it's doing in the past. All right, so also look, there are a bunch of colors here. Whenever you see a yellow bar above 0, that tells you it's a bullish sign, and a red bar that tells you it's a bearish sign. So we'll talk through that as we look through Thinkorswim platform. All right, now let's look at TTM Squeeze indication from John Carter. So what we'll do is we'll look at a screener here where stock price is more than $10. We want a little more stable stocks. That's why we picked stock price more than $10. And these are very liquid stocks. Look, volume is more than 2.5 million shares traded, very liquid. And there's a TTM squeeze on a daily basis or a 3-day basis or a monthly or weekly. I love to look at the TTM squeeze, especially I love the weekly and monthly squeeze because they tend to stay longer. And we're looking for a compressed volatility Bollinger Band within the Kelton channel that tells the stock has to break out fast on the higher side or the lower side. And that's what we're looking for. When there's a tight compression of volatility, stock has to go higher. Stock can do their own thing for a long time, but we are looking for stocks that's ready to break out on the higher side or lower side. All right, now let's jump in here. Look at list of stocks here. Look, we got great stocks here. Look, we got nice stocks. This is sorted by volume. AMD has got highest volume in this set of stocks here. And then you got your sales. I love to see, if you want to buy call option, I want to make sure there's a nice sales growth here. It tells you 1 year sales growth, how the top line is doing. And then you got net margin here, and you got to make sure fundamentally you like the stock depending on what strategy you're implementing. If you want to go long, make sure there's a nice and solid net margin and also top line sales growth. If you want to go short, you could look at stocks with negative net margin like AMC as an example, and few more like BEKE and so on and so forth. And then finally you got to look at both RSI, relative strength index, and IV percentile. Look, here we got a combination of high IV percentile like AMD here, IV percentile 81, and we got low IV percentile, which is AMC, as you can see here. Combination of RSI and IV percentile is a killer. I love when IV percentile is low and RSI low. I can go long all day long. And similarly, when IV percentile is low, when IV percentile is high, like look here, we got gold, IV percentile is high, but RSI is low. You could look at strategies, 55 is still low. You could look at long strategies here, given this is a good stock here. So we'll look at few of these names here, and look, we also have here the cash flow, free cash flow, as well as cash on the balance sheet. At the high level, I love to look at these two here, RSI and IV percentile. RSI low indicates stock is sold off, and when IV percentile is also below 50, that's a good sign for a long type trade here. On the other hand, if RSI indicates something like CWET here, which is RSI is very high, 70 here, IV percentile is also a little bit high but not too high. In these type of scenarios, you could look at buying put options. So play the short side of the game here by buying put option. You will benefit from stock coming down here. And look, we got few high volatility stocks like Dow here. Look, it's a high volatility, not the Dow Caterpillar here. It's a high volatility stock. You could implement some strategies to take care of stocks like Caterpillar and go from there. All right, so what we'll do is we'll look at a few of these names here. Before I do that, let me also bring in TTM Squeeze Look, now we brought in, a new build here. We got, some of these great indicators. We got here Altman Z score that tells you financially how the company is doing. 8.8 is great. It's superb. AMD is firing all cylinders. Then you got Piotrowski F score. 5 means books are in a rock solid shape here. I like the higher the better. And then financial growth and profitability indicators from Morningstar is rock solid. And next year revenue growth is positive. Overall score is 96. I feel pretty good about AMC here. AMD here, given RSI is low here. Only problem I have is IV percentile is a little bit high. That's why we can't just buy call option, because if you buy call option here when the IV percentile is high, you'll pay a huge premium. That's why we should look at spreading strategies on stocks like AMD. All right, so depending on your aggressiveness, you could do two strategies. I will take you to Thinkorswim platform here from TTM Trade. All right, so look, we'll get this chart here, AMD chart here, and look, we got AMD chart right here. As you look through this chart here, look, we got 1 year chart here. Look, IV percentile is 81. That's really high. By looking at the volatility here, look, implied volatility is at a high level here, around 81 like we talked about. And look, from a DMI perspective, look, red line crossed over the blue line here. That tells you it's barely mildly bearish at this time here. On the balance volume is pretty solid. That tells you folks are buying the stock here. Check-in money flow is going higher. That tells you folks are buying the stock. I feel comfortable about AMD here because they announced the earnings. They did very good on the earnings front, and they got legendary leader Lisa Su. What I would do in this scenario is I would go into the TTM Squeeze chart here and see what's going on in the TTM Squeeze chart. All right, let's jump in here and go to TTM Squeeze chart. Look, I got AMD here. AMD, I got what I've done here is I've got here a 1 year chart. It's a 1 day 1 year chart. I got a 2 year 3 day chart, as you can see here. I got a 5 year weekly chart, and we got a 10-year chart, which is long term. I like to look at the chart in multiple time frames so I know what's going on here. So look, from the outset you understand here short-term weakness in a yearly chart, 1 day weakness you can see here, and 2 year chart you see weakness, but as you go longer term you'll see bullish sign here. Even up here it's doing pretty well here, and same story in a 10-year chart also is doing very well. Generally stock is bullish, but it has got some short-term problems, as you can see here. And look, this has got a TTM squeeze indicator, which is a red dot here. We got a red dot here that indicates right now we got a Bollinger Band inside the Kelton channel, tight compression of volatility. And look, when that's happening, if you see here, we got a C wave here. C wave is below 0, and it's actually trying to improve. As you see here, the dark blue lines are getting shortened. That tells you it might be good as you go forward. But right now, yeah, the lines are below 0 line here. The dark blue lines are below 0. And as you scan through here, look at the long-term chart here. Bar is above 0. That tells you in the long term it's bullish, but in the short term it's bearish. So to take advantage of these type of scenarios, given the stock is fundamentally rock solid, I would go into this option chain right here. And look, we got AMD here. I got brought the chart here, and what I would do to take advantage is depending on your nature of aggressiveness here, I would implement multiple strategies. Look, stock price is 93 right now. All-time high is 164 in 52 weeks. All-time low is 76, as you can see here. So what we could do here, if you're mildly aggressive, or even say moderately aggressive, you could or even conservative for that matter, you could buy a call spread. Look, stock price is at 93 here. You could go right here, go to 90 here, buy a call spread here. You could do 90, 100 vertical here. There you go. We got 90. You're buying a call option at 90, and you're selling a call option at let's see $100. So that way you got a $10 to play with here. So look, you are paying $4.73 here. It's a $10 wide spread. Remaining portion of $10, which is more than double your money, is going to be yours if the stock does well. So what we'll also do is we'll look at the analyze tab here and look at the profitability here. All right, let's go into analyze trade. Let's analyze this trade here. All right, I got the trade here, and we got vertical spread. We are buying 90 and we are selling 100, mainly because volatility is high. We want to spread it so that way we are not impacted. All right, so as we look through here, we got the chart here. What I would do is I would go here and set the slice to break even, and we got expiration date 7/2. I would say 7/2 here. Look, we got the chart here. We are buying the call option here, and let's see here. I got multiple things going on. I'll unclick here. There you go. I think we're good now. Look, we are buying the call spread here, and look, we got a stock price. Let's see here. Stock price is about 90 or so here, and look, as the stock goes higher, we will make money. So look, profitability, we got here profit and loss chart here. As the stock goes higher, look, you have to look at the blue line here. As the blue line goes higher and higher and higher, you'll start making more and more money. This is your profit and loss here. And if you were to see here, I got a price slice here. If the stock goes 10% higher, look, I got a price slice which is 10%. If the stock goes 10% higher, you will make $175. So if the stock goes to 102 from the current price, you'll make around $175, and your profit is capped. If you want to add one more price slice here, we could do one more price slice here. I can say say 20% here. There you go. Let's make it percent. All right, so let's make it 20% here. There you go. If the price goes to 20% here, then we'll make nice money. Look, we'll make right here, we'll make $304 if the price goes to 20%. So this is this is how you kind of play the game here. By looking at this analyze tab here, you'll see what's going on here and see how we can make money. And you can go back here and say set the slice to break even, and you can do 7/2 here. It will remove other slices. We got two more slices, as you can see here. So as long as the price remains higher than 94 or so, you'll break even. If the price goes higher, actually as the price goes higher, you'll make some good money. So what we'll do is we'll actually go into the trade tab here and execute the trade. You can look at the break even in a good fashion over there. All right, let's go back here, and we got the trade right here. Looks okay, our trade has gone away here. Let's go here 90 and place this trade right now. Vertical, we are buying a vertical spread here, 90 and 100. All right, so we are doing this trade right here. We're buying this spread, and I'll confirm and send here. Look what's going on here. So we are buying this spread, and we are paying $473, as you can see here. That's our max loss. That's the money that we pay. But if the stock goes higher, we'll make $527. You'll more than double your money. And the break-even price is $94. Look, $94 is break-even price. If the stock goes above $94, $94 will break even. So that's how you kind of understand this profitability here. So if you want to buy AMD stock outright, to pay to buy 100 stock, you pay around $9,300, but you are now controlling 100 stocks with just $473. And because it's a spread, your maximum profit is $427. So this is how you kind of play with it, and you kind of understand what's going on here. And we'll look at a few more strategies here and go from there. I would confirm and send this. It's one of the good strategies you could play like this. And depending on your nature of aggressiveness, if you're a little more aggressive, I recommend a back ratio call spread here, one of my favorite strategies on fundamentally solid stocks. Look, stock price is about 93 here. You could go here to 90 and you would buy a call ratio spread here. Look, we'll do here, buy a call ratio spread here. All right, so what we're doing is I would even go a little higher here. I would sell in 90 here. Look, stock price is 93 here. Look, stock price is 93 right now, and what I'm doing is I'm selling in 90, which is below the current stock price. I'll get some good money for selling this. Look, 90 is right here, so 90 is right here. I'm actually selling in 90 here for about say 14.60 or so, but in return I'm buying two call options at strike price 92.5. that's higher than the current price. Look, 92.5, which is right here. I'm buying two here. So what it lets me do is really I'm a net buyer here, and because volatility is high, I'm selling a call option at a higher price here, higher than the current, lower than the current price here. So I'm financing my two purchase of call option with the selling of a one call option. That's what I'm doing here. And for doing that, I'm paying $11.80. And if I confirm and send here, look, I'm selling this. I'm actually buying this call ratio back spread here. I'm a net buyer. By looking here, you can say I'm buying two, selling one. I'm a net buyer of call option here. And my max profit, the reason I love this strategy is look at my max profit here, infinite. I'm going to make good money here if the stock goes higher. And as you scan through here, my break-even price is 106, as you can see here. So that tells you, I can make some good money here. And my max loss is 1,430. That's the money that I pay, for the cost of the trade is 1180, but my max loss is 1430. That's my max loss. So if you buy stock outright, you got to be careful. You might lose money, but this is the maximum that you could lose here. So with that, what we'll do is we'll go into analyze trade tab here and look at the profitability of this trade. All right, let's go here, go to analyze tab here, and what I will do is I will look at my trades here and make sure I have right ones here. I think we got right one here. We got AMD. What I would also do is I will go here and set the slices to break even. All right, 528. I think that's the expiration date here. I would set the slice right here. So actually my expiration date is September 16, September 2022. I would do that. All right, looks like it gives me two dates here. I will choose this one here, but I got my date here, which is 16 September. And so as you can see here, we got as the stock goes higher, you could make some good money here. Look, we got price 92, and as the stock goes higher, we can make some good amount of money. Look here, we got stock as it goes higher. Look at the profit and loss here. As the stock goes higher than the break-even point here, I will start making some good amount of money. Look, as the stock goes higher, you make some good amount of money. That's the reason I like these type of trades here. When the stock is down big time, I would do a back ratio call spread, for a fundamentally good stock, so that way you can control 100 stocks. And also volatility is high, you'll do the spread here for high volatility. So with that, it's a good strategy. You could go implement this strategy here. All right, now let's look at few more stocks here and go from there. So as you look through here, we got few more here. We got AMC here. For a stock like AMC, look, financially it's not doing well, as you can see here. Altman Z score is negative, and look, financial growth, profitability, everything is going south here, and looks like next year revenue growth is positive. Look at the overall score, very, very, very negative. For a stock like AMC here, look, right now if you see here, implied volatility percentile, IV percentile is 24. That's a low IV percentile. For a stock like AMC here, given it's not good financially, I would implement a little bit different strategy here. So you could do, what you can do here is you can go back to Thinkorswim platform here, TTM Trade, and you could look at AMC here. All right, let's look at AMC here and go from there. Look, AMC. As you look through here, stock is not doing much, as you can see here, kind of staying sideways and not doing much. And this stock has got it's a crazy stock. It's also sometimes it goes higher, so that's why you got to be looking at this stock a little bit carefully. And if I go back here to my chart here, I would go and bring it up, AMC here, AMC. So as you look through AMC here, look, stock is it's, as you scan through here, it's not doing great here. It's got a hold recommendation from analysts, and as you scan through here, look, let's look through here and see what's going on with the stock here. And we got current ratio, RSI is low, pretty low here. I'm trying to see where is my short. Let's look for short here. Look, short ratio is 19.61. That tells you this can also squeeze those shorts and go higher. So what we'll do in these cases is I'll go back to Thinkorswim platform here and bring up my my TTM squeeze chart. As you scan through here, look, we got a squeeze forming here. Look right here in the weekly chart here, we got a squeeze forming, a red dot forming here. When that red dot is forming, the C wave is below zero. That tells you this can go lower. Still, it can go lower. And the long term, look, it's on the higher side. It's above zero line here. That tells you long term it may go higher. So what you do in these type of scenarios, it's not cut and dry. I would implement a different strategy here. What I would do here is let's go back to the trade tab here, and you could implement on AMC here, AMC. What you could do is you could go right here and look at maybe 117 days out. And all right, so you could do 117 days out, and stock price is at $12, as you can see here, just $12. All-time high, 52-week high is $72. This can go higher. 52-week low is 9.70. So, and we can go right around $12 right here. And in these scenarios, what I would typically do, I would buy a straddle. That's what I would do. Either straddle or strangle, either one is okay. So for example, let's buy a strangle here and go from there. So even straddle is good. Let's buy a straddle. Look, we are buying a straddle right here. It's 117 days out. All right, so we are buying a straddle. We are buying a call option at $12. We are buying a put option at $12. The reason we are doing it a straddle is because volatility is very low right now. All right, so we'll confirm and send this here, and as I confirm and send this here, my maximum profit is infinite, as you can see here. As the stock goes higher or lower, I would make money. And right now I'm paying $708. That's my maximum loss, as you can see here. And my break-even point is there are two break-even points, 4.92 and 19.92. As the stock goes below $4 or stock goes above $19, I will make money. If this gets short squeeze and goes higher, I will make money. If this gets completely burnt out and goes to $0, again I make money. So this is one of the good strategies you can implement and go from there. So what we'll do now is we'll look at the profitability by looking at Analyze tab. All right, let's go into Analyze tab here. And we got our trade, which is AMC here. And let's go to profitability analysis. and there are a bunch of things going on here. Let's go to risk profile right here, and let's see where is our stock here. Straddle. Okay, we got our straddle selected here, and we got our chart right here. So look, we will make money either way if the stock goes higher or lower. What I will do is I will got a bunch of things going on here. I will remove AMC. There you go. I think we got two straddle going on here. That's good enough. So as you see here, we got also price slice here. Let's go to price slice. Let's make it break even here. 9/17, that's the expiration date. All right, so look here, we got our straddle going on here, and let's also add few price slices here. All right, so look, as the price goes higher, if it goes 10% higher, I will make $41, as you can see here. If the price goes 20% higher, I will make $93. It goes even higher. If the price goes 20%, I will lose some money. But if the price even goes below, let's make it say 30%, 40%. If the price keeps going low here, if the price, look, we start making money when the price goes lower. So this is one strategy you can implement when you don't know what's going to happen to the stock. It might go higher, explosive. Look, if I increase here, if it goes higher by 20%, look, I'm making some good money. If it goes higher, explodes and goes higher 50%, look, keep making it 50%. Look, we'll make some good money here. This is one of the strategy when you don't know what way stock will go. You could do something like this and go from there. And if you're not super aggressive like this, you could also buy a strangle instead of straddle. If you buy a strangle, you'll pay a little bit less money. You could do that too. If you want to buy a strangle here, you could just delete here, and right now price is $12. You could just go buy a strangle here. There you go. You're buying a strangle. You're buying a call option here at $12. Buying a put option at $11. This is a strangle. You're paying a little bit less money, as you can see here. And you could also change it. You can say, I want to buy call option at $13. Right here, $13. And you could buy put option at maybe say $10. So this is a little more less aggressive fashion. You could confirm and send here. Look, this is also infinite profit here. You're paying a little bit less money here, and because you're buying the strangle, your profit potential is infinite, as you can see here, and you're paying less money here. All right, so if you want to analyze the profitability here, you can go to Analyze tab here, and you could look at this. Right here, we might have multiple things selected. You could all right, so in here, as you see, if the price goes 50% higher, you'll make some nice good money here. If the price goes below here, if the price goes up by 20%, you'll make some good money. If the price goes lower, it has to further go low here for you to make money. As price goes lower, down by 60-70%, you'll start making money. So this is one good strategy you can do for high octane stocks, which may go higher or lower. It's a coin toss. That's when you buy either a straddle or a strangle. All right, let's go back here and look at a few more. Look, one of my favorite stock here, Crowdstrike. Crowdstrike was doing very well earlier, but right now, as I look through here, Crowdstrike, look, we got high IV percentile here, 92, and look, it's got nice growth, it's got nice financials, as you can see here, but profitability is not there right now, and it's got good in next year revenue growth here. For a stock like Crowdstrike here, given it's got a very high IV percentile, you could implement strategy like buying put spread here. That's one of my favorite strategy. With this all high inflation and high volatility, it's good to buy a put option for high octane stock. Look, it's got as you see here, Crowdstrike is right here. Look at the PS ratio here. Valuation is sky high here, 23. That tells you there may be some more downturn here. So what I would do is really I would implement a put strategy here. I would go here to the trade tab and I will bring up, look, I will bring up here Crowdstrike CRWD here. All right, Crowdstrike, as you look through here, look, we got a dot. Let's see here. Let's go back right here. Crowdstrike, we got Crowdstrike right here, and at least I don't see a dot here, but it may be looks like we don't have a squeeze here yet. But as you scan through here, Crowdstrike is really breaking down. As you can see here, we got Crowdstrike, and look what's going on here. Crowdstrike is really wondering where to go. So what I would do is, in these scenarios, I would go here to the trade tab and buy. Let's go back to trade tab here. I would really buy a put spread here. Right now stock price is 148. Look, it jumped up by $6 here. You could buy a put spread here, and you could do say 150 and 140 put spread here. That's a good one to buy. All right, so we are buying 150 and we are selling 145. That's a little bit less aggressive. I would even go a little bit lower here, and I would buy 140 here. Look, we are paying $4.85 here. Our profit potential is it's more than double here. So if I confirm and send, look, we are paying $4.85 to make $5.05. This is a good strategy for stocks like Crowdstrike, which might have some more downturn as we go forward. And if you're a day trader, as an example, you could just buy a just put option at say about say 60 delta or even 70 delta. You could just buy a put option. You're paying a steep amount of money. That's why I don't recommend this for for high volatility stocks. And you could also do one more thing. You could do a put. You could buy a put back ratio spread here. So you're buying, you're selling 150 put, which is higher price, and you're buying 145 put here. And as you confirm and send, your profitability is look, we got break-even price 120, max profit is $12,000. So it's a good amount here. And your max loss is 12425. So you could implement such strategies here. And if I go to analyze tab here, analyze trade, look, this is a good trade here. Your max loss is about right here. If the stock stays at your the sold put here, you'll do max loss here. But if the stock goes down, as stock goes down, you'll start making money. As I come down here, look, we'll start making money. If the stock goes below here at below 121 here, you'll start making money, a good amount of money. So this is another way I would do on the stocks that are really high octane, high price to sales ratio or high valuation. You could implement such strategies by buying put spread or even put back ratio spread. All right, the list goes on here. Keep watch on both IV percentile and RSI and implement the strategies. And if a stock has got high price to sales ratio here, like the one right here, Crowdstrike, I would go with the put spread or a put back ratio spread. If a stock has got, look, we got two more here, AMT and CDNS. You could implement such strategies, but also pay attention to the financials. If a stock is rock solid, like AMD here, you could buy call back ratio spread or even a call spread, or even you can buy the stock outright. And we got few names here. Look, we got two more at the end here, both Cadence Design as well as AMT. Even though they got high valuation, looks like those are rock solid stocks per Morningstar here. And you could implement call spread or call back ratio spread and take advantage of stock going higher. All right, so with that, let's jump in here. Thank you very much. Happy investing and trading. So please subscribe. We can look at how to do long-term capital appreciation, swing trading, fundamental analysis. Please subscribe. Thank you very much.